welcome to another video from Rennie Foresights. Today we're going to look at, is crypto gambling? I'm going to do this as both a short version and a long version. So I'll start with the short version first. The short version is that to establish whether or not something is gambling, we need to understand odds. So if we look at something like trying to win the lottery, the reason why this activity is often perceived as nonsensical is purely based on odds. So a person puts in money and we look at the risk on that money. The risk is that their money after buying said ticket is then worth nothing. And then we look at the likelihood of them winning that lottery. When we look at the likelihood of them winning that lottery, we see that it's basically astronomical. The number is crazy. The likelihood of most other possible life scenarios happening to you are substantially more likely. I've heard it said before that you're more likely to get struck by lightning than to win the lottery. This is not the case for a project like Bitcoin. Just statistically, most people who bought and held Bitcoin for a period of greater than 12 months up till this point have had a downside risk that is not 100%. It might be 20% or 50% during certain periods, but it's definitely not 100% at any period. If we were to expand this idea into the longer version that I mentioned before, then what we would look at is things like risk-reward ratios and gambling with crypto. What we should talk about is real numbers. I previously mentioned to you in the short version this concept where if someone is gambling, the odds of them being successful are unbelievably low. If we look at the data over time in cryptocurrency, if you just pick random projects, this concept remains the same, especially if you have no idea what you're picking. But if someone were to pick Bitcoin specifically, over time, we've seen that though all the other coins have fallen off the list of projects, that it has not. Just simply has not. If we then look at the actual gain potential versus loss potential, we also see that we couldn't lose 100% of our money at any point, unless of course you were liquidated from leverage, but that's a completely different story. Over time, it's basically just gone up. Doesn't mean it can't go down, and this is not investment advice saying, yeah, if you buy Bitcoin, you'll make money. I'm purely giving you an educational perspective to real historical information. At the same time, if we do a risk comparison, in order to do a risk comparison, what I would suggest we look at is the March 2020 crash. This is the latest crash to happen that was very substantial for both the stock market and the crypto market. During this time, many people said,
Bitcoin is going to zero.
If we look at this crash during this period, what we'll see, Bitcoin went down more than what the stock market went down. But if we assess this on a risk-reward ratio, by taking the top of February, taking the very bottom of March 2020, that's our loss, that's how much it dropped. Then we do the same thing on both on Bitcoin and the S&P 500. Then we take this massive gain that people say we've gotten in both. People say that
on the S&P 500, things have blasted off crazily.
And they also say the same thing about Bitcoin. So let's compare the potential losses and those potential gains as a ratio number. What we find is with the S&P 500, this ratio number, risk of loss versus gains from that period, from buying the top of March 2020, you are looking at a 1.08 risk-reward ratio. For people doing trading, most people won't even do a trade if they're not going to make a 2 risk-reward ratio. where there's half the likelihood of losing versus, or double the likelihood of winning versus losing. Your likelihood of losing versus winning is almost exactly the same given those numbers. Now, let's look at the case of Bitcoin. We'll look at the same time period, that top of February to the bottom of March, and then to where we are today. And if we were to look at this risk-reward ratio for Bitcoin, like I said with the S&P 500, from the top of the February highs to the low of the March lows to today's price, assuming that we bought at the top of February before the crash happened and lost all of that paper losses during that time on both things, buying both at the exact same time, right before the crash, what we would find is that Bitcoin today would have got you a risk-reward ratio of 5.91. Over 5 times the risk-reward ratio of your S&P 500. So when we look at this and people say,
Bitcoin is more risky than the S&P 500.
it's not really sensical, because risk is a measure of your downside risk and your upside potential. Now, they may mean they don't understand it, they may mean it's more volatile, but you can actually see many cases where people have come up with smart solutions to this problem. So say, for example, you wanted to get a risk-reward ratio without as much risk. What you could actually do is, instead of having 100% stocks and 100% Bitcoin, you could actually say 50% cash, 50% Bitcoin. And this Bitcoin, that was only half of the money, and the other half was cash, would still outperform the gains, but you would have cut your loss side in half. Basically, you could balance those numbers and see if it's possible that by having a ton of cash and very little Bitcoin, you actually outperform the S&P 500. And I've actually seen examples in articles written by people who claimed that during specific periods of time, people were buying 10% Bitcoin, 90% cash, and outperforming the stock market. And that is crazy. All right, none of this has been financial advice. All of this is purely educational purposes, just trying to explain to you how this math works so that you can start your own educational journey down the path of better understanding the math behind how this works, rather than just following thoughts and ideas and opinions of people who are not providing you factual evidence as to their actual argument as to whether or not this is gambling, not gambling, high risk, low risk. You need numbers, and you need to understand the numbers. This is how we come to logical conclusions. I would also ask, if you have any questions, please leave a comment below. Please like the video, and please subscribe for more of this content. Have a great day, and see you in the next video.